naked puts now. Sam joins us. He says, "Hi, Mr. C, and all in the room. Good afternoon. Good afternoon, Sam. It's good to see you here." We're going to go to naked puts now. We're going to cover two different topics. We're going to cover two questions from Giles. So while we're talking about the cash secured puts and the levels that may be available for the fully cash secured naked puts, let's go ahead and take the questions here. In a naked put position, cash secured naked put, we're selling a put option which obligates us to potentially buy shares of stock at the strike price of the put that we're selling. We don't buy the stock in this position, but our broker is going to require us to put up the capital in case we have to purchase those shares of stock. With that DAR position, we saw the stock was trading around $67, $68. I might sell a $65 or $60 out of the money put, get $1 or $2 in premium, looking again for that 1, maybe 2.5% yield. As long as the stock stays above the put strike price, the put expires worthless, we keep the premium. A lot of investors use this as a way to get into stock at a discount by might just selling at the money or slightly out of the money put options on a larger cap quality stock. And if the stock falls a little bit and they are forced to buy shares of stock, that's okay. They get it at a little price. They keep the premium. Now they convert it to a covered call position, perhaps. Okay. But Giles has specific questions related to some of the tools. And his first question is, how do I set up the search of naked puts that will only show me companies with a minimum profit of more than $8? Okay, well, that's very simple in a sense, but it comes with some caveats. Depending on what kind of stocks you're looking for and what range out of the money you want, you might not see positions that have it just by the way the market's priced. Or you may be seeing highly volatile positions, Giles. That might not be the best trades, although you're getting a higher premium, might not be the best trades for this type of neutral to semi-bullish position with large fluctuations. But there's some details missing, but that's okay. We're going to show Giles exactly how to do this. In any strategy that you're interested in on power options, whether it's bull put credits that we talked about for Dennis, iron condors, anything along those lines, you have a specific set that you want to see. The simplest thing to do is scroll down below the listed trades, where we saw you could navigate through the defaults or adjust the criteria based on your needs. And what I'm going to do here is simply clear the filters. I'm going to exit everything out from the default search. It's still there. I'm not going to delete it. I'm just creating a search from scratch. Now, what was missing from Giles' input, and it's okay, we don't need to know all of it, of course, is the expiration time frame you're looking for, Giles, and what types of stocks you're looking for as well. But let's just say this. I'm going to go out to March. Now let's go to February. Let's keep it shorter term. We're going to go 15 days, which is going to be harder to find slightly out of the money puts or good out of the money puts that offer an 8% premium unless we're looking at very high price stocks, which is fine. But now the strike price is higher, which means the margin requirement, the cash secured requirement, Giles, is going to be much higher as well. So let's look at February. Let's look for that. Since we're 14 days out, let's look for a good naked yield of 1%. I'm not going to push it to 2 or 3%. I want to be maybe 2% out of the money. And basic stock criteria, I'm not going to put in a stock price range. We are going to check only to see stocks that don't have earnings between now and expiration. And I'm going to go to the technicals and I'm going to look for stocks that are trading above their 20-day moving average. All right, so what have we just done? We've just created a basic search, 15 days out, 1% naked yield, 2% out of the money or more, stocks in an uptrend, no earnings between now and expiration. Normally, I'd put in other filters for positive earnings per share growth, maybe just mid to large cap stocks. We have other webinars on that. So let's go ahead and submit. Oh, one other thing I will do, my apologies. I want to see some action. I just want to see the options that traded today and have maybe at least a 50 to a 100 open interest. Let's go to option volume today of greater than 0. And I'm not going to use the bid-ask spread. Normally, I'd use that too, so I don't see anything that has too wide of a bid-ask spread. But my feeling is, Giles, we're going to need to have a wide bid-ask spread to see the midpoint to get some of the $8 premiums. No stock price restrictions. Let's submit the search and see what we've got. Okay, so here you see some. VAR Biotechnology 1010. This one is a high yield, but it doesn't have the minimum $8. We have near the max that we show, 600 results, Giles. No problem. Let's scroll back down again. You're talking about straight option bid price. Your minimum requirement is $8. And there you go. VAR Biotechnology, the 60 and the 65. Zoom video at 419, the 410 strike, 1450 premium, 3.6% yield, Giles. Every option here, 39 total results that have a bid price of $8 or more. You might get a little higher ones there also, and higher premium as well. Again, I avoided earnings between now and expiration because I don't want any sudden surprises. You really have to do your research here on this biotech. It is, why is it double? Why is it triple? Why is it 6 times more than, 3% is around the average yield here on the first page, throwing these two out. Why is this one 6 times the return? This one likely has a phase 2 or phase 3 trial coming up for a drug it has in the pipeline, which means what? The stock could suddenly gap up to 90, or it could potentially fall to 15. Maybe not a good structure to use that type of stock. You'd want to do your research and analysis here. I'd want to take a look at the company information, news, and profile, see what's coming up, which is causing such an inflation and a high implied volatility. Again, you're getting a great return in comparison, but there's a reason why that return is high, is because this stock either just did or has the potential to swing wildly for some upcoming event. Okay, let me save the search. Anytime you create a basic search by clearing the filters and plugging in your specific requirements in any strategy, we'll just save the search and we'll call it, what is today? February 5th, high option premium. Okay, and of course, you can tweak this. You can increase the range out of the money to filter it down further, but this is a good, manageable list of 39 results for 15 days out, but you still want to do your due diligence, and depending on your account size, as we expected, we're looking at some higher price stocks in this equation to get the $8 minimum premium, Giles, that you wanted. All right. Now, you asked another question, followed up, using the other tool, or when I search by symbol, it shows me only the options with $8 of profit or higher. Well, I'll come back to that in a second. For the naked put screen, I'm sorry, my apologies. For the search by symbol in covered call and naked put, this is a holdover from an older tool that Ernie had called the one strike tool. It allows you to put in up to 15 stocks at a time. Let's see. Oh yeah, I can use DAR as well. Let's see, use KHC. And we use Tesla. So I'm using a wide range of different prices here, looking for February. And I can put up to 15 symbols in 5 different blocks. So I can look at 75 symbols. This tool cannot be adjusted, Giles. For the search by symbol tools, they're hard-coded in. You can't do a criteria search in the search by symbol tool. And for the covered calls and the naked puts, of course, this holdover from the one strike is just showing me the one strike sort of at the money and the one strike out of the money, or for covered calls, one strike in and one strike out, essentially, just the 2 closest strikes to the current stock price. But there's no filtering that can be done, and there's no guarantee that those will match your criteria. These are hard-coded in. But let's go back to our search. Okay. We've got our search filters here where we avoided stocks that had earnings between now and expiration. You know, we want it to be 2% out of the money for February 15th. We wanted a 1% yield. Bid price of $8. I likely would put in a probability as well. Let's just say greater than 65%, maybe 70, of course. The idea is that when I'm selling a naked put, I should only sell a naked put if I don't mind owning the stock. So I don't need to be too far out of the money in that case. Where are my deltas? They were not too, oh no, that's going to be about right. Okay, so we're not going to be filtering out too much. We probably are at 65, that's perfect. Okay. Now, I changed the probability. I'm leaving the $8 in place. I'm going to leave the time frame. No, actually, I'm not. I'm going to go to all expirations. And I'm going to go to our fundamentals, and I'm going to take the earnings date out, and I'm going to take this technicals out. You with me so far? Keeping the same search, just added the probability, removed the technicals and fundamentals for the time being. And I changed the expiration to all expirations. Now, you go into the fundamentals tab. We'll save this search. I'll save it right now. Oh, I'm sorry. No, I don't want to do that. Let me go back. Let me submit the search. Now, this is wild because it's going to be across the entire market. Naturally, we're going to see some high implied volatility positions come up as we'd expected. Okay? But I'm going to save this search now. I'm going to change the name, and we're going to call it My One Strike for $8. Ah, fantastic. Now, you can do this in any strategy. You can create just a basic search for the probability, return, range out of the money, delta, anything of that nature that you want to do. Why am I saving such a blanket open search that's telling me I have too many results? Because now I can go to fundamentals. Remember, I'm looking on all expirations in this cycle with a minimum of $8 premium. And I'll say, show me Apple. Has to have $8, has to be slightly out of the money, has to have a 65% probability on Apple. And we have 18 total results from various expirations from 770 days out in time up to 350. Where are the other Apple positions? Why am I not seeing June's? I'm sorry, June's. Yeah, but why am I not seeing June's? Why am I not seeing March's? Because those options that are 2% out of the money on Apple with a 65% probability don't have an $8 bid price. You'd have to be closer to at the money, 0% out of the money. You might even be slightly in the money to see nearer term options with that minimum $8 premium. But we want to be out of the money. We want a good probability of the put expiring worthless, and you want your $8 premium. So the only ones that match for Apple are 350 days out in time. There are puts on Apple that have $8 between now and January 21. Don't get me wrong, but they're not in the criteria set that we're looking for. Okay, that's the way to do that as well. So that's the simplest thing. You create your first search with your basic criteria that you were looking for. We were looking for that near-term expiration, minimum $8 premium, some range out of the money, relative fundamentals, and avoiding earnings between now and expiration, Giles. And then what we'll do is you can take out those fundamentals, create a new search that is just your search by symbol. Where did it go? There it is. Okay, great. So let's just, there it is, my one strike for $8. And it comes up with the full list, but then I can just go to fundamentals and say, show me TSLA, for example. We know it's going to be much higher price, much higher margin requirement in this case. Again, it's showing these further out in time because I told it to sort by the highest naked yield. So on the last pages, if I go to page 9, excuse me, we're starting to get closer. There's an April one, the 740 minimum bid price, but still the probability you want as well. And we could find others. We could shorten the time frame. Just toggle it now that we've already saved the search. Just play around it. There you go. So there's 23 for March that have at least an $8 put premium, still matching that 65% probability. But again, it's higher priced for those positions. Okay? The higher margin requirement as well. That's how you do it. Use the search tool to set your basic settings. Start with a clear palette by hitting clear filters. Put in your specific requirements, in this case, option premium, but still wanting to be a little bit out of the money, a good percent probability above, maybe avoid earnings between now and expiration, and you've got a basic search. And now in the fundamentals field, you can just start screening one stock at a time with that search by symbol field. You've got your own default search by symbol with the premium you want, and an open search across the market to find those puts that match your criteria for your time frame, whether it's 15 days out, 40 days out as well, that offer the minimum $8 premium in that case as well.